So for today, I will be showing to you how to prepare the closing entries and also the post-closing trial balance for the given problem. This is for Peter Pan shop that is found in problem 3.7 in your handbook. So the closing entries will involve the closing of the accounts that are considered as temporary because there are two types of accounts, right? So we have the real and then we have the nominal or the nominal slash temporary. So the nominal or the temporary accounts will be closed at the end of the year because they only exist for 1 year and they are not carried over to the next accounting period. Only the real accounts will be carried over to the next accounting period and they become the beginning balance in the next period. So what are the real accounts again? The real accounts are the SFP or the Statement of Financial Position balances. So these are the assets, liabilities, and equity. For the equity, it's only the capital account that will remain if we're talking about sole proprietorship. But if it's a corporation, the other components of the equity, such as retained earnings, accumulated profits, they will be carried over. Okay, but for a sole proprietorship or a partnership, only the capital will remain, but the drawings will be closed because it's a temporary account. Meanwhile, the nominal accounts include the income statement accounts. So they are nominal or they are temporary, again, because they will be closed at the end of the year. They will be closed to the capital account. Okay, so let us begin with the first closing entry that should be made. So the first set of entry would include the income. You're going to close the income to the income summary, and then you're going to close the expenses to the income summary, and then you're going to close the income summary to the capital account, and then you're going to close the drawings to the capital account. So the first one is we will close the income. So the closing entries will be prepared at the end of the year. So we will place the date. So that's December 31. This is for 20x1. So what are the incomes here? So uh we have two here na ay repair income o na ay unearned repair income. But which of the two is considered as an income? So only the repair income. So although the unearned repair income is below the repair income, it's not considered as an income. So only the repair income. So repair income, that's 275,000. So the repair income will be debited because here it's on the credit side or it has a credit balance, because if we want to close an account, we will place it on the opposite nga balance. So para ma-zero out siya, di ba? Pag opposite sila balance, ma-minus. So since credit siya, so we need to debit that in order to close it completely. So when we want to close an account, it means we're going to zero it out. Next is, since it's the only income here, so we credit income summary. So that's 275,000. The next entry would be for the expenses. So since the expenses have debit balance, we're going to credit them all in order to close them. So we have salaries, expense, we have supplies expense, rent expense, taxes and licenses, utilities expense, then interest expense. Then credit them all. So that's 45. You have 600, 55,000, 7,250, 46, 750, then 250. Okay. And then we're going to sum it up. So the total of the credit side. Okay. So we will use the function here para dali ra ma-add. Okay, so that would be 649. Wait, I think my error. Okay, so this is only 55,000. Okay, so that's 154,850. And this would be debited to income summary. Okay. The next thing you're going to do is to get the balance of your income summary. So if we're going to prepare a T account for the income summary, so if we're going to make a T account, so let's make a T account here. Okay. Then we'll place income summary. So we are going to post the entry. So you have credit to income summary 275. And then we have a debit to income summary 154, 850. And then we're going to get the difference between the two. So there would be a balance of 120,150. So this is a credit balance because the credit side is greater than the debit side. So if we want to close this 120,150 credit balance, what are we going to do? So para ma-zero out siya, we will debit 120,150. Again, we need to close this one to the capital account, and since credit balance siya, what we are going to do is to place it on the debit side when we prepare the entry so that ma-zero out siya. So therefore, debit income summary 120,150 and credit to the capital account. Here the capital account is PAN capital. 120,150. So in effect, because of this debit to income summary, we're going to place here 120,150. So ma-zero na siya, kaya parehas naman sila. So if we get the difference, that would be 0. Okay. Then next, we're going to close the drawings. So since the drawings has a debit balance, so we're going to credit PAN drawings. That's 5,000. And then we debit PAN capital. So that would be charged against the capital. Okay. So these are the closing entries. So the basic is you close the income, you close all the expenses, you close the income summary balance. So it depends if the income summary has a debit or credit balance, because if debit balance sad siya na adiri ang mas dako nga amount, then in the entry here, it will be credited instead of debit. Okay, for example, so let's make a sample transaction. So for example, if this one is 300,000, okay, instead of 154,850, so this is just example. So there's a difference of 25,000, but that's debit balance. So in this case, since debit balance siya, the entry would not be this one. So the entry would be PAN, capital, and then credit, income, summary. And that would be 25,000. Okay, so instead of debiting income summary, you're going to credit that if the income summary balance is debit. Okay. Another way also on preparing the closing entries is you can combine the income and the expenses into just one entry. Okay, so this is an alternative. So you can do this one especially if there are only few transactions. So for example, this one, there's only one repair income. So you can combine the expenses and the revenue. Okay, so we're going to combine. Okay, so that this one. So one entry lang siya, one compound entry. And we're going to total this credit side. So it will be the sum of the credit side. Okay. So that's 154,850. Of course, that's the same with this one. And then we're going to get the difference. Okay, the difference between 275 and 154,850. And what will be the difference? So we will deduct. So that would be 121.50. Since the debit side is greater than the credit side, so the balancing figure here is on the credit side. Okay, so again, since our debit side, 275,000, is greater than the total of the credit side, which is 154,850, so the balancing figure is on the credit side. So 120,150 para mag-balance. So if we're going to sum up now the credit side, you will get also 275. So balance na sila. And what would be this balance? This will become income summary, which is the same with what we have computed earlier. Diba? That's 120, 150. And this one, since it's credit balance, you're going to close that here and then credit pan capital. So mas direct, kuha na nato dayon kung credit balance ba or debit balance si income summary. And you need to remember that if the income summary has a credit balance, okay, if the income summary has a credit balance, it means there is a net income. But if the income summary has a debit balance, it means it's a net loss. And if there is a net income, it will also mean that your capital account will be credited. Okay? Sorry. Capital account will be credited. Okay? So, it will be credited the same with this one, diba? If there is a net income, the capital account will be credited. Meanwhile, if there's a net loss, the capital account will be debited. And what is the effect if we credit the capital? If we credit the capital, it will increase the capital. But if we will debit the capital, it will decrease the capital, which makes sense because if there's a net income, this means na naatay ginansya. And if we are the owner and naay ginansya, there is a net income, it means our capital will increase. Okay? Meanwhile, if lugi, if there's a loss, then the capital account will be debited. And that would mean that our capital account will decrease. Okay, so let's proceed to the post-closing trial balance. Okay, so on the post-closing trial balance, so I will show you another page. Okay, so we can uh, make shortcut in the uh, preparation. So this one is in a worksheet format. So this is in a worksheet format. Wherein we're going to post the closing entries here. So we will follow the same procedure earlier when we close the entry. So first is we close the income. So this is our income. So when we close that, so we debit the amount. And then again, this is not included in the closing entries because this is a liability. Then we close all the expenses. So this, since this has a these have debit balances, so we're going to credit. Okay. And next is, remember the difference between the debit and the credit uh, balances. So 275,000 minus all the expenses, just like here. Diba? What's the difference? It's 120,000. 150, and that would be credited here. Okay, why do we credit 120, 150? As you can see here, diba? If there is income, we're going to credit the capital. Okay, so we credit here the capital, and the next step is we're going to close the drawings, this one. So you close that. Remember, this is a debit balance, so you're going to credit, and then the debit would be to the capital. Okay, so as you can see, balanced ang debit and credit columns. So next is you're going to extend the amounts. So since there are no adjustments here from this account, from cash on hand until this one, until the notes payable, so we can just simply paste that here, because if you're going to look at the column for the closing entry, so there are no items man, so we can just simply place that here. Okay, and then we have this one. So how are we going to get the balance? So this is 132,850 credit. Then there's a debit of 5,000 and a credit of 120,150. Remember what would be the treatment if we have opposite balance? If it's opposite with the normal balance, we're going to deduct. So to get the balance, the normal balance for capital is credit. So we'll place it here. So we'll start with the original balance, then deduct 5,000, and then add the credit, which is the net income, and you will get 248,000. For the drawings, this is a debit balance, and then we credited 5,000, so that would be 0. So wala na siya. Next would be you have 275 credit and 275,000 debit, so that's 0 because they have opposite balance. Then the unearned repair income, since there are no adjustments here on the closing entries column. So copy, credit, then credit. Okay, so as you can see, they're balanced. And then since these items were closed, so 0 out. So what will be left here would be your asset accounts. Okay, so we will copy this one. Okay, so we'll simply copy to get the final balance. Okay, so copy this one. And then pan capital, then credit. And then we're going to sum up because the remaining items, sorry, there's still one unearned repair income. So we'll place it here. Okay. You can just place it anywhere on the liabilities side. So I'm going to arrange it according to the asset, liabilities, and capital. And then we're going to sum up the debit and the credit columns. Okay, so that would be the post-closing trial balance. Okay, so we're going to place heading. So this is the company name. Okay, so we're a little short with a space. Okay, so this one. So this is Peter Pan shop, and this is our post closing trial balance. So we need more space. Okay, and this is for December 31, 20x1. Okay, so in effect, the balances that you can find here, all the balances here would be the beginning balance in the next year. So the beginning balance for the cash on hand would be 25,000. So beginning balance, which means that's on January 1. And then the same for the rest of the accounts. Okay, so this will be the opening balance in the following year. So as a recap, the only tricky part here is on getting the capital. So remember the formula to get the capital ending balance. So that's the capital beginning. So for this one, so this is 207, sorry, this is 132,850, and then you're going to add net income. But if it's a net loss, you're going to deduct. Okay, so it depends on the outcome of the operations. If there is net income, then you're going to add. But if it's a loss, you're going to deduct. Then total, and then this one should be deducted good. So this is your drawings. And this would be your capital end. So this is how it was computed earlier, if you can remember. Okay, so if you can remember this one, this is your beginning balance. That's 132. Okay, sorry. Let's copy this one. So this is 132,850. And then we have the net income 120, 150. And then we have the drawings 5,000. So just apply the operation. So this is added. And then this one is deducted. Okay, so you will get 248,000, which is the amount we can find here. Okay, so that is for the preparation of the post-closing trial balance. And here we have the closing entries. So these are the closing entries.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching!